high. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show, where we bring you the story behind the latest developments in the banking sector. It is 31st of January and I am Ruchika Chitravanshi. We are here a day before usual, ahead of the upcoming interim budget. In today's episode, our cover story this week will discuss whether RBI is ready to change its stance. In Banker's View, we have with us K. Satyanarayana Raju, MD and CEO of Canara Bank. In Banking for You, we will tell you all about Rana Talwar, the first Indian to head a global bank, Standard Chartered. Our consulting editor, Tamal Bandyopadhyay, will join us for our Expert Take segment, and at the end of the show, we will tell you the results of last week's poll and the question for this week. As the Reserve Bank of India's Monetary Policy Committee meeting draws closer, Indian markets are fraught with speculations regarding the rate-setting panel's next move. While most economists expect rate cuts to begin later in June, market participants believe the central bank may change its stance to neutral considering the tight liquidity conditions. But is the RBI ready to change its stance? Kasturi Akhil finds out.
The Monetary Policy Committee, scheduled to meet from 6 to 8 February, is expected to change the monetary policy stance to neutral while maintaining the status quo with regard to interest rates. During the December policy review, Jayant Verma was the sole MPC member to recommend a neutral stance. However, most market participants believe it is now the right time for the Reserve Bank of India to change its stance from withdrawal of accommodation to neutral, considering the sustained liquidity pressure in the banking system. The MPC has held the repo rate steady at 6.5% for the past 5 MPC meetings. The repo rate was raised by 250 basis points between May 2022 and February 2023 to battle high inflation. Since April 2022, it has maintained its stance of withdrawal of accommodation to bring retail inflation back to its 4% target. Bank of Baroda's Madan Sabnis believes that the central bank may maintain the status quo on both the policy rate and stance in the upcoming policy review as well.
No, I don't think the RBI would be in a position to change its stance. So I think the status quo kind of position is something which we could expect for at least the next 2 policies. And probably as we get into fiscal 25, that's a time when this kind of an issue could be on the discussion table.
Market participants think that the central bank is adopting an accommodative approach towards liquidity, as the RBI has been conducting continuous variable rate repo or VRR auctions to ease liquidity conditions, thereby making the case for a change of stance to neutral. The central bank conducted 5 VRR auctions in January to infuse liquidity worth 7.5 trillion rupees. Liquidity deficit in the banking system widened to a 14-year high of 3.5 trillion rupees on 24th January, as compared with a deficit of 1.3 trillion rupees in the beginning of the month. Economists at ICICI Securities Primary Dealership have indicated that the central bank may change its stance to neutral based on inflation outlook, global financial conditions, liquidity situation, and real policy rates. However, rating agencies like India Ratings and Research believe that it could be difficult for the MPC to move to a neutral stance at this time because retail inflation, as per the RBI's projection, will come down to 4% only in the second quarter of financial year 2025. India's retail inflation based on Consumer Price Index rose to a 4-month high of 5.69% in December from 5.55% in November. In addition, the repo rate hikes of the past are still working their way through the economy, and GDP growth, despite monetary policy tightening, is on track. Bank of Baroda's Madan Sabnavis echoes the same thought.
If I go back to two policies back, that is not the last one, but the one prior to that, I think the RBI had mentioned when they were talking about the stance being unchanged, that it does believe that notwithstanding the fact that the RBI has increased the repo rate by 250 basis points, it has not seen the transmission fully taking place. So this actually gives a reason for one to believe that unless the transmission of the 250 basis points goes through in terms of the lending rates as well as the deposit rates, only then will the RBI be convinced to change the stance. In fact, there has been variation between public and private sector banks. Public sector banks have been more forthcoming, the transmission has been faster, but definitely it has not been anywhere close to the 250 basis point. So I think that's the reason why the RBI will wait for some more time and before it changes its stance.
In an interview with a business channel earlier this month, RBI Governor Shaktikanta Das had said that any premature pivot from the current withdrawal of accommodation stance could prove costly for the Indian economy. While most market participants expect a strong response from the RBI to tackle the tight liquidity scenario, a shift in stance by the RBI may be premature in February. The central bank, however, remains committed to bring down inflation to 4% and not just within the 2 to 6% tolerance band.
So, market experts are of the view that the RBI has been making the case for a change of stance to neutral. But as rating agencies have pointed out, this could be difficult as RBI would not be able to reach the 4% inflation target before the second quarter of FY25. Moving on, we now bring to you an exclusive chat with K. Satyanarayana Raju, MD and CEO of Canara Bank.
Hello and welcome to the Business Standard Banking Show. Public sector lender Canara Bank reported 27% growth in its net profit for the quarter ended December to rupees 3,656 crore. Asset quality of the bank improved while provision coverage ratio was close to 90%. The bank was able to report a margin of more than 3%, though the low growth in low-cost deposits was a concern. To discuss some of these issues regarding the earnings, we have today with us Mr. K. Satyanarayana Raju, MD and CEO of Canara Bank. Mr. Raju, welcome to the show.
Thank you. Thank you very much.
Let me start with the liquidity scenario, which has become very tight. In such a scenario, will you able to keep your net interest margin on the levels which you have projected, 2.9 to 3%?
Yes, that's the last quarter also I shared with you that our guidance is between the 2.9 to 3% the NIM. But when you are seeing that after concluding the December quarter, we are able to maintain above 3%, it is at 3.303. The major reason is one is we have a liquidity coverage ratio of 135%. And that excess surplus, whatever the liquidity is there, we want to use it effectively. And that effectively using it, one thing is, again, another one thing is we have an excess SLR of more than 6%. This excess SLR also we are keeping with the RBI and raising a low cost borrowings from the RBI. And the another thing is from SIDBI and the NABARD, wherever the possibility is there, refinance we get, because our priority sector lending is at 56%. So wherever there is a possibility of that advantages out of that these things, we are submitting that refinancing and we are claiming and we are taking that refinance at 5.5. And third one is what I want to say, that is our quality of the assets, maintaining slippages, health of the assets. The second one is recoveries in towards the NPA and towards the written off. That has helped us to reduce that credit cost drastically. And the first time in the history of the bank, we have reduced it to less than 1%. It's a 0.97%. These all the factors have made us to maintain at least a 3%.
Coming to the deposit front now, the CASA growth was 5%, while the retail term deposit growth was 6%. But overall term deposit growth, if you see, it was 9.5%. Does that mean that you are relying more on the corporate deposit, bulk deposits?
No, let me say that actually for last through 2-3 years, it is an year-on-year percentage is you are looking at a 6% of the deposit, retail term deposit growth. But in the current year itself, that 6% growth is there in the 9 months. The absolute growth in the current financial year during the last 9 months is around 31,000 crores in the retail term deposits itself. Absolute number. But when you compare the year on year, it is reflecting that's an 6% growth is there, because last 2 years our growth in the retail term deposits was a little sluggish. But again, our CASA growth is comparatively less. What we aimed is, at least it should be, we are given a guidance at 8.5% growth in the deposits, so that we can achieve 75% of the CD ratio, as against the 10.5% of growth projected in the advances. We have achieved now, because the advances are growing at 11.69%. Deposit, of course, it is growing at 8.55%, more than what we have recorded, given the guidance of 8.5%. But the CASA is not growing at the level of the deposits. Other deposits are growing in the same level. So this, from 1st January onwards, we started a special campaign for this quarter, 3 months, special campaign on the core deposits, which includes retail term deposits as well as the CASA. And that we have given several incentives. We announced it. We are focused more on average deposits instead of that an absolute, only the fag end figures. That targets have been also designed in such a way that the average deposits, that is, consistency will be there in the growth. And with
Right.
that initiative, entire machinery, we are now focused on that liability side. We are sure that we will maintain that 8 to 8.5% both in the CASA as well as in the retail term deposits.
Since you are saying CASA is a challenge, is there a plan to increase the savings account deposit rate?
Rate, we at this moment we don't, sir, because it's already we have a lot of stress on cost of deposit. Current quarter, our cost of deposit has increased 6 basis points, whereas our yield on advances has increased only 3 basis points. We can't increase the rate of interest on advances just like that, because it's a market driven. The cost of deposit, whatever the increase, the 3 basis points, it is indirectly impacting our NIM, and it is indirectly
Right.
impacting our OP also, OPS as well as NPA. That's why we are not too much on that. We are, but instead of that, SB, if you start increasing the rate of interest, then it's one and the same. But the term deposits, what is the case is, it's a single transaction. But the
Right.
savings bank is not a single transaction. For maintaining that account and meeting that transactions, so much infrastructure is required and so much operating expenses are involved in that. That's why just mere increasing the rate of interest, I personally don't believe that your CASA will increase, because
Correct.
CASA, the
Correct.
people will keep that to meet that requirements of for the next 1 month to 2 months. They don't keep a surplus funds in that when the rate of interest is so high on the deposits. Whatever the beyond that surplus, the minimum requirement, they will divert it to the term deposits. Mere increasing the rate of interest will not increase your CASA, according to my personal opinion.
And due to the increase in risk weights, have you increased the interest rates for NBFCs, the loans you give to NBFCs?
Yes, sir. Actually, we are the first banker in India that we have communicated to all the NBFCs who are affected for that higher increase in the rate risk weightages. We have communicated to everybody. Thanks to our clients, NBFCs, 95 to 98% of clients, they came forward and sharing that burden to the some extent on mutual negotiations. One or two cases where they are not felt that it is feasible for them, then we have taken a let go approach and we have received back that entire prepayments. We asked them to prepay that entire limits. That's the reason you can see from our NBFC exposure has come down from 143 to 135.
And finally, sir,
Yes,
can you give us an update on listing of subsidiaries?
yes, sir. Already our board has approved the Canara Robeco Mutual Fund to go for the listing, and that has been shared in the media and the SEBI also. And now the second subsidiary, that's a Canara HSBC, that is in the process of that getting the permission from our board in a month or 2 months. That our board clears that proposal also. That also, once the board clears, we will share with the media and the market. And
For an
these two
IPO
will be likely to happen in 2025, sir.
in FY25 itself, both the IPOs are
Uh,
likely to happen.
it's likely to
Okay.
happen, that, sir.
Okay.
Because the
Okay.
pre-listing formalities will be there. That takes at least a minimum 12 to 15 months. That's why we are expecting that it may happen in the financial year 25,
Can you give us an
2025.
idea how much these companies will raise?
No, even after raising that, actually, as per the SEBI guidelines, if any company is going for the listing, the promoter's stake should not be more than 75%.
Right,
So
right.
promoter companies will keep 75% only. They cannot keep beyond that. But
Beyond
still,
that.
in these two companies, Canara Bank will be the lead stakeholder.
Stakeholder. Right, right, right. On that note,
That
Mr.
status
Raju,
will continue.
on that note, Mr. Raju, thank you very much for speaking to Business Standard. As always, it was a
Thank you,
pleasure
sir.
talking to you, sir.
Thank you. Thank you so much.
Renowned banker Gurvirendra Singh Talwar, popularly known as Rana Talwar, passed away on January 27 at 76. Talwar was the first Indian to head a global bank, Standard Chartered, in 1996. Rana Talwar, the son-in-law of KP Singh, the chairman emeritus of DLF Group, served on the boards of several companies, including Asahi India Glass Limited and Great Eastern Energy Corporation Limited. In this report, Abhijit Kumar explores the veteran banker's life.
Born in 1948, Rana Talwar commenced his banking career with Citibank in 1969 after graduating from St. Stephen's College in Delhi. During his tenure at Citibank, which ended in 1996, he played a pivotal role in developing the bank's retail businesses across the Asia-Pacific and West Asia. Talwar served in various countries including Saudi Arabia, Hong Kong, Singapore, Belgium, and the United States. Subsequently, he assumed responsibility for all retail operations in Europe and the United States and became a member of the Citibank Citigroup Policy and Operating Committees. In 1996, Talwar left Citibank to take on the role of Global Chief Executive at Standard Chartered plc, making history as the first Asian to lead an FTSE 25 company and a major global bank. His tenure at Standard Chartered saw the repositioning of the bank as a prominent emerging markets institution, including the acquisition of Grindlays Bank from ANZ Bank. He led major acquisitions and played a significant role in the bank's growth. In 2002, Talwar departed from Standard Chartered plc to establish Sabre Capital Worldwide, a private equity firm where he served as a founder chairman and majority stakeholder. Among Sabre Capital's notable transactions in India was the acquisition of a strategic stake in Centurion Bank. Talwar served as the chairman of Centurion Bank, which later merged with Bank of Punjab and became known as Centurion Bank of Punjab or CBOP. In 2008, HDFC Bank acquired CBOP. He then joined real estate giant DLF in 2006. Talwar, the son-in-law of real estate tycoon KP Singh, chairman emeritus of DLF, also served on the board as a non-executive director. The veteran banker was also appointed as a director of Asahi India Glass Limited, a leading glass solutions and manufacturing company in India. With his business acumen and strategies, Rana Talwar changed the course of how banks operated in Asia and their dealings overseas. He is now survived by his wife Renuka and their son Rahul, who is also involved with DLF.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
That's all about Rana Talwar, who indeed changed the course of bank dealings in Asia and elsewhere. In our next segment, I spoke with our consulting editor, Tamal Bandhopadhyay, about his expectations from the interim budget and the RBI policy that would follow. Here's the chat. Hi, Tamal. Welcome to the Banking Show. We are very close to the budget now. Tomorrow is the budget day. And in your column also this week, you are talking about the upcoming interim budget. To start with, what are your big expectations from the budget?
Thanks, Ruchika. It's an interim budget, you have said this. So if you ask me, I don't expect too many things. Budget would not create too much of noise. The real budget will happen later in July. For the time being, I think all of us expect that our finance minister will stick to the fiscal consolidation path. I mean, she has committed. So what does it mean? The current year fiscal deficit 5.9%, which the budget had estimated would be achieved. And the next year, that is fiscal year 2025 fiscal deficit, I would think that it's 5.2, between 5.2 and 5.3. And by 26, the glide path says that you will achieve 4.5, which means 70 basis point drop in the current year and the next year. So that's going to happen. Of course, the disappointment is the divestment program, which the budget had envisaged. It's not happening, the kind of money. But on the other side, we have seen the direct tax. I mean, the tax inflow is more than what we expected. So it's a balancing act, but I will only look for this fiscal consolidation path, and I'm sure this budget will not disappoint us on that ground.
You've talked about disinvestment. That is something that has been on the agenda as far as the banking sector goes. We have not seen much action on the privatization of the 2 public sector banks that had to happen. Can you take us through what's happened there?
Yeah, that's what I had written about it. When it comes to the banking sector, it's very often what happens with budget promises, but it doesn't happen, or it takes too long. For instance, the first budget of this century, when the finance minister Yashwant Singh spoke about bringing down the government stake to 33%. Did it happen? It did not happen. Okay, it has not happened. Instead, what we have seen, the consolidation of banking sector. I mean, the public sector banking, and there the consolidation was never on the budget agenda. It's outside the budget. But 2 years back, finance minister announced that 2 public sector banks will be privatized, and also IDBI will be privatized. Now, this is not a part of the the privatization program or disinvestment program where the government wants the money to support its to contain the fiscal deficit. It's not that. It's essentially government has understood that it should not run too many banks, should not own too many banks, and the other side of it is this. If you see historically, the government has been paying my money, taxpayer money, in terms of capital infusion to keep the banking sector alive and kicking. So government does not want to do that. And our Prime Minister, Mr. Narendra Modi himself said that government has no business to be in the business of running businesses. So that's what happened. And Air India took so long. I would like to believe this is a pretty sensitive issue. Now the speculation is on when does it happen, when is it going to happen, which are the 2 banks, etc. Last time we heard almost, I think, 10 months back when the one of the bureaucrats had said that the process is on, and there is speculation on that it's been kept, it's been shelved. It's not the case. It's on, and that but how long it will be on, we have been hearing it. And the same thing about IDBI bank privatization, which is relatively easier because government has already offloaded bulk of its stake to LIC. Now the intention is to bring down LIC stake as well as government stake and get a private investor for 60% stake. But that has not happened as yet. So I would like to believe that it is little sensitive, particularly the banking privatization. So this budget will not say much about it. Probably the post-election budget will take it forward.
Of course, we will come to post-election budget when it happens. But before that, very close to the budget, we have the RBI monetary policy that will come. To what extent do you think RBI will take forward the agenda set by the budget, and what would it mean in terms of the policy itself?
Yeah, this is what always happens, that Reserve Bank of India policy, in fact, ever since RBI has gone into 6 bi-monthly monetary policies and MPC meetings. So the budget and the last policy of the fiscal year, actually it's go one after another. And that's what we say. First is budget and eighth is the RBI policy. Now, will RBI have anything to do much with the budget? I'm not very sure. The RBI's task is cut out. I think the status quo will continue. Of course, the liquidity deficit in the current scenario has gone up. It's over 3 trillion. It had gone up. RBI, will RBI change stance and make it neutral? Not even that. I would like to believe the status quo will continue because inflation is not yet contained, and RBI has repeatedly from different forum, RBI governor has been saying that inflation, we need to contain inflation on a durable basis.
So fiscal deficit is something that obviously, as you pointed out, you are hopeful that the government will stick to the target, and hopefully we will see some more action on the pending bank sector reforms as well, as you've said, that the budget will not disappoint. Thank you so much, Tamal, for sharing your insights today. We will see you next week. It is time now for our poll results. Here's what we asked you last week. Would you like to invest in cryptocurrency? Well, it seems most are wary of crypto, as 76% of our respondents replied no, they won't, while 24% said yes, they would like to invest in crypto. Did you know that the volume of customer complaints that RBI receives through its Ombudsman scheme rose by more than 9% for FY 21-22? Consumers face a lot of problems in the day-to-day banking related to ATMs and credit or debit cards. In today's poll, here's what we are asking you. Is your bank responsive to your complaints? Tell us yes or no. The poll is open from today, which is Wednesday, and you can respond on Twitter, Instagram, LinkedIn, and our website. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.